All right, so today we're going to pull back the curtain on the single most important first step of any major financial audit, the plan. We're talking about the blueprint that lets auditors tackle these massive, complex companies and deliver an opinion that you, me, and the entire public can actually trust. So let's get into it and see how it's built from the ground up.
So how do you do it? I mean, really, how do you check every single number in a company worth billions? Well, here's the secret. You don't. You can't. It's literally impossible. And that right there is exactly why planning is so critical. An audit is about providing reasonable assurance, not a 100% guarantee, and the only way to get there is by having a rock-solid, meticulously crafted blueprint before you even walk in the door.
So here's our game plan for this explainer. We're going to start with the big why. Then we'll break down the two key parts of the blueprint itself, the strategy versus the plan. After that, we'll look at how auditors map out all the potential dangers, the systems they use to keep the quality high, and finally, how the whole thing gets documented for the history books.
Okay, first things first. Why even bother with all this planning? Well, let's be real. Audits are incredibly complex. They're risky, and they can be super expensive. If you go in without a solid plan, things can go sideways fast. That's why planning isn't just some nice-to-have suggestion, it is the absolute non-negotiable foundation of the entire process.
Now, check out the language from the official standards here. The key word is effective. See, the point of planning isn't just about ticking boxes or going through the motions. It's about being smart. It's about focusing your time, your energy, and your resources on doing the best possible job to get to the right answer. It's about effectiveness.
So what's the payoff? Well, a really solid plan actually lowers the risk of getting it wrong. It makes the team zero in on the areas that matter most, the high-risk spots. It helps them find problems before they blow up, and it ensures you've got the right people with the right skills on the job. It's all about being proactive instead of reactive, and that's what protects the integrity of that final audit opinion.
All right, let's dive into the blueprint itself. Just like any big construction project, it has two different but totally connected parts. You've got the architect's high-level vision, and then you've got the detailed step-by-step instructions for the builders. In the audit world, we call these the strategy and the plan.
The audit strategy, well, that's the grand design. It's the 30,000-foot view. You're not looking at individual transactions yet. Instead, you're asking big questions. What industry are we in? What are the specific rules we have to follow? What's our deadline? And, maybe most importantly, what kind of team, what kind of resources are we going to need to get this done right? It's all about setting the scope, the timing, and the overall direction of the audit.
And you can see how one flows right into the other. That high-level strategy isn't just an idea floating in space. It becomes the direct guide for creating the much more detailed audit plan. You have to figure out the what and the why before you can ever get to the how.
So let's really nail down the difference here. The strategy is your what and why. It sets the big picture direction. The plan? That's where you get into the weeds. It's the how, the who, and the when. It's the specific, nitty-gritty procedures, the exact sample sizes, the hard deadlines. The strategy is the architect's blueprint. The plan is the day-by-day construction schedule.
Now, a huge part of creating that blueprint is thinking like a detective. You have to anticipate what could go wrong. Auditors spend a lot of time mapping out the potential dangers, and one of the biggest dangers they always have to look out for is fraud.
And let's be super clear about what we mean by fraud. This isn't an honest mistake or a simple error. No, this is an intentional act. It's somebody trying to deceive someone else, and it usually comes in two main flavors. Either cooking the books to make the company look better than it is, or just plain old theft of the company's assets.
You know, auditors can't just cross their fingers and hope they find fraud. They have a structured game plan. It's a four-part approach. First, they understand their responsibilities. Then, they do a deep dive to assess the risks. Third, they design specific audit tests to respond to those risks. And finally, they report what they find.
So what does this actually look like on the ground? Well, here are 4 key moves. They dig into journal entries, especially the weird ones made late at night or at the end of a quarter. They challenge the assumptions management makes in their financial estimates, looking for any signs of bias. They investigate bizarre transactions that just don't seem to make any business sense, and they get it in writing. They make management sign a letter confirming they've told the auditors about any fraud they know of.
Think about it. You can have the most beautiful blueprint in the world, but if your construction crew does a shoddy job, the building is going to collapse. It's the same in auditing. You need a powerful quality management system to make sure the work being done is up to standard every step of the way.
A top-notch quality system really rests on a few key pillars. It all starts with ethics, rules that everyone in the firm has to live by. Then, you've got to have the right resources for the job. The right people, sure, but also the right technology and tools. Next comes performance, which is all about clear direction and supervision. And finally, you have to monitor the whole system constantly to find weaknesses and fix them.
And this isn't just some abstract idea on a chart, it's all about people working together. Quality flows down through a clear team hierarchy. The partner is like the general contractor, directing the whole project. Managers and supervisors are on site every day overseeing the work. And seniors are there reviewing what the junior staff does. Every single person has a role to play in keeping the quality high.
Now, for the really big, high-stakes audits, think major public companies, there's one more layer of defense. It's called the Engagement Quality Review, or EQR. You can basically think of it as a second set of eyes. A completely independent partner, someone who had nothing to do with the audit, comes in at the end to challenge the team's biggest judgments before that final report goes out the door. It's a huge deal.
So we've designed our blueprint, we've mapped out all the dangers, and we've put our quality controls in place. The very last step in this whole process is to create a detailed, permanent record of every single thing that was done. We're talking about the audit documentation.
Okay, so why is writing everything down such a big deal? Well, for one, it's the evidence. It's the paper trail that backs up the auditor's final report. It proves they actually did the work correctly. It also helps the current team stay organized, it gives next year's team a head start, and it's what regulators look at when they come in to do their inspections. It's absolutely crucial. So let's actually deconstruct one of these documents, which are called working papers. It's pretty straightforward. You've got the client's name right at the top, Murray Co. A clear subject, risk assessment. You see who actually did the work, Rob Cash. Then there's the objective, which answers the question, why did we do this? And right there at the bottom, the proof of that quality control, who reviewed it. Every piece tells part of the story.
And when you take all of these working papers, sometimes hundreds, even thousands of them, and put them all together, you get what's called the audit file. This file is the complete storybook of the audit. It tells the entire tale from the very first planning meeting to the final signature in enough detail that any other experienced auditor could pick it up and understand exactly what was done and why.
And this isn't a temporary record. Nope. Auditors are legally required to hang on to these files for years, typically a minimum of 5 years. That just goes to show you how important this documentation is as the legal evidence of the work they performed.
And that wraps up our look inside the audit blueprint. But it does leave us with a pretty big question for the future, doesn't it? As artificial intelligence gets smarter and smarter, you have to wonder, how much of this incredibly complex planning and judgment will still be a uniquely human task, and how much of it will eventually be written by code? It's definitely something to think about.